All right, what it do, KTTV? Welcome to another episode of the Administrators podcast, where we break down the stock market with structure, discipline, and real strategy. If you're an educator, new investor, or someone trying to understand what's actually happening behind the headlines, this is your classroom. Today, we're covering three major things: what the market is doing right now, why it's moving, and a deep dive into one stock that's showing real structure on the charts. No hype, no guessing, just clarity. So, without further ado, I'm going to introduce my co-host, and then I want him to get into our market pulse today.
Hey, everybody. It's JoJo here. Glad y'all could be with us tonight. All right, so let's get right into it, KTTV. All right, it's good to be back, y'all. All right, so if anybody's been watching the market, you've known that the market has been pretty sour the past few weeks. The market sentiment has really taken a downturn. KT will go into it, but one of the things that has happened is that AI bubble. And so a lot of people out there really afraid. You know, earnings came out, people were spending a lot of money on AI. And so we had a little bit of a downturn, a little bit of a downtrend in all of our tech stocks. They got hit pretty hard. And so as you can see here now, this is our, S&P 500 heat map. So let's take a look at some of these green spots. We had Microsoft, we had Nvidia that was up 2.5% today. Microsoft was up 3.11%. And that's because we're starting to shake back into that tech. People were realizing that, you know what, perhaps AI could be a good thing down the road. And so a lot of our financials took a hit today. Apple was up a little bit last week, and now we're starting to see a little bit of a drop off, only down 1%. So, Apple's still hanging in there. It's at 274, y'all. We've been talking about Apple almost every episode that we have, and we've also been talking about Nvidia. Now, Nvidia's a little bit away from its highs, but as you can see, we're creeping back up. All right, so with this, we got our financials down. We got some of our consumer cyclicals are down. Our defensive stocks are down. Those shopping out there trying to get that last piece of all that. But that Walmart stock, man, it's at 129 KT. Wow. So Walmart has really been climbing lately. And so this is our fear and greed. I mean, this is our heat map. You can see that we do have a little bit of red going on in here. And some of this green is recovery from those downtrends that we're trying to shake free. So now let's take a look at our fear and greed index. Now, the fear and greed right now, we are neutral. We have been down. We were, in the fear for a while, the past couple of weeks. And we were, because we hit that greed mark back in early February. So past week or so we've been hitting that fear, and then we tried to climb back into the neutral, and we are in our neutral right now. So neutral, you can see here how it's been getting out of that fear. We've been making a climb, and so we've been hanging steady around here, and then we took that dip. Because like we said, a lot of people out there are scared of that AI, especially when those earnings came out and people were spending a lot of money on that. And this just so happens so fast, y'all. That market takes a hit, and then all of a sudden people panic, people start selling, and there we go into that, that fear. And so here the past couple of days, we have been getting back out. All right, KT.
Look, man, this market sentiment is something, man, because that pulls me to what I need to talk about next, which is the macro headlines, and why the market is behaving the way it is. And so this segment really follows good with what you just talked about, because it especially talks about that fear and greed and having that neutral position. Because right now the market is reacting to a mix of economic positioning and sector leadership. We're seeing capital rotate primarily into large cap tech, while other sectors show more hesitation. So this tells us institutions are not pulling money out of the market, but they are reallocating it. So the sentiment, like Jose said, it remains cautious but not fearful. There's no panic selling, but on the other hand, there's no euphoria buying. That puts us on what I call a decision phase environment. And when this happens, the market enters this phase, price becomes extremely level sensitive. And so if you go through and we'll look at the platform probing today, and we'll kind of look at some of those levels that just go with what we have going. So one thing about this in this level sensitive environment is traders start respecting those key support and resistance. The volume becomes more important and breakouts need confirmation, right? So better understand how to do that. And so as we talk about macro in the headlines, macro wise, investors are watching inflation expectations, the rate policy commentary, and AI infrastructure pending. We got jobs coming out Wednesday. We have, I think, CPI coming out Friday. And so all of these items are driving that tech momentum right now. And so we know that when tech moves, the broader market feels it. And so I guess that will bring us today right into our platform probing segment. But before we go, Jose, anything you want to talk about on that? Anything?
No, I just think, man, you're spot on with all that, man, because, you know, when tech moved to the downside, the market moved to the downside, and now if we see tech on a rebound, we can definitely start to see the market in a rebound, getting back to that neutral from that fear, as we were talking about earlier. And so spot on, KT, because I think this market's going to be driven by what, you know, decisions are made and how those numbers look this week.
Yes, sir. All right. And so now that brings us to our platform probing segment. And Jose, you know, one thing we did not do in this segment, man, we ain't had none of our stuff, bro. Look, man, we got to go right into the platform probing, man. So this is what I really want us to look at today with Nvidia is, let me see here, share this tab. All right, so I want to get us into what was going on with Nvidia as we look into our platform probing. So this is the hourly chart, right? And so we can look at the hourly chart and we see that the price closed around 189.92. And so this put Nvidia roughly up 2.5%. But the percentage is not the structure, right? That's not the, that's not the story. The structure is the story. Jose, what you call this structure right?
Man, I tell you what, man.
Hey.
Hey, we got a candle that is forming a pennant, which looks like, to me, a bullish flag.
Yes, sir. I will say that, bro. And so early in the session, so we talk about early in the session on the hour candle, we saw this strong bullish candle, impulse candle, right? And so we got this big green candle that popped us directly into the 191 zone. So what does this candle tell us? That tells us that buyers stepped in aggressively. But the key to that is that's not retail noise. That is institutional activity. So then now, if you go back and look, because here's what matters. After that big push, we stalled, right? And so we have multiple small candles that formed under that resistance. And so I will go ahead and put our resistance. We may even come back here since we had a few taps right here. So we had a few candles that stalled under that resistance. So that was near 190.50 to 191, right? And so what do? Is we call this compression. And remember, compression is not a weakness, it's preparation. So Jose just said we are coming down for a bull flag. That's what this could be, right? And so what we need to do is make sure that we know if compression is not a weakness, it's preparation. So now the next piece we want to look at in this platform is looking at our moving averages. So remember how I set mine up. This is my short term right here. First is our VWAP, but right now just go to our MAs. So this is our 9 EMA. All right, so this is our short term momentum. And so we can see what it's getting ready to do. It's curling upwards. All right. Our midterm trend is rising. And so this is our 60 right here. And we can tell that our midterm trend is rising. And now we come back and we look down here at our 200. And so as we look at our 200 and we see that our long-term averages are stacked below, that is all bullish alignment. So that means that the price is riding the short-term support. That means the dips are being defended. So this is what we're looking for tomorrow with platform probing. The only two levels that matter to me will be the resistance for 190.50 to 191 and the support 188.70 to 189. If the bulls break and hold above 191 with volume, we are likely to expand to 193 to 195. Or on the other side, if it breaks 188.70 calmly, we probably rotate back to 186. And so remember what I said about those levels. Everything else is noise, right? So as we get ready to close this thing out, please remember, big candles create emotion. Structures create opportunity. We don't chase the first move. We study the reaction to it. And that's how we don't get caught with the bag. Jose, what you got, man?
Man, so speaking of Nvidia, man, that's a great touch on that Nvidia. So I'm gonna go ahead and share my screen real quick, guys, because we're gonna go into this trading real quick. And so as KT was talking about, we have our flag that's apparently starting to form. But I want to touch on this RSI. So like KT said, we could either break and we can go up to about 195. And if you look at the numbers, 194, 195, he is absolutely spot on. Or if we break down, we're talking about coming down to this 187. And so if you can see that dotted line going across, and so I want to caution everybody too that right now we are at a 64.5 RSI. Anything above 70 or at 70 is overbought. And so you want to be careful of that. But if you can see right here, though, we did creep up into around 72. And so right now we're at a 64.5. We are looking at, we can still continue to go. We still have some wiggle room to go down a little bit. If you look at a true pennant, bull flag pennant, it's not going to completely go up right away. And so we do have some wiggle room to go down and then eventually break off and then hopefully top off at that 195. And so the reason why Nvidia is important is because once you start looking at Nvidia, and then you got to look at our QQQ. Our QQQ took a hit, because we did have that downturn in the market. And as you can see now, this is a 7-day chart. The Qs have bounced a little bit, and there's a little bit, not as significantly noticeable as Nvidia, but there is the beginnings of what we could also see here as a bull flag. And so if we can break this top, we're looking at trying to get to about 618. If we continue up, we got about 620. But if we break down, we're looking at a good 609, 610. And so the good thing about this is right now the RSI is a little bit lower than the Nvidia RSI. And remember, RSI is your relative strength index or indicator, and it tells you if a stock is overbought or oversold. Anything over 70 is overbought. Anything below 30 is oversold. And you can see here that the Qs are hanging right around 58. So again, we have some room to go up. We did take that hit in the Qs. And so hopefully with the tech making a move, the Qs can also make a move. Our next stock, SPY, because this is our overall market generator here. And you can see here also, we're starting what looks like could be another bull flag. And so if we top off at this 696.95 area and we can break that, then hopefully we can reach all-time highs at 700. But if we break down, we're looking at the first stop at 693, 692, and then probably down to 690 again. RSI at 60. So we do have a little bit of room to get to that 70. And as you can tell, we just had a little breakdown right here. And so as we look through the rest of the week, we are paying attention to Nvidia, the Qs, and our SPY because our overall market sentiment is right at neutral. So we're going to see if that will take us to some all-time highs. All right, KT.
All-time highs, baby. God. All right, administrators, let's bring this session home. Today we covered the market structure, the macro drivers behind the move, and a detailed breakdown of Nvidia's 1 hour chart. And here's the biggest takeaway. The market right now is not chaotic, it's selective. That means discipline matters more than speed. So if you're watching key levels, respecting your structure, and managing your risk, you're already ahead of most retail traders. So I guess on our next episode, we're going to dig deeper into the sector rotation and identify where institutional money is quietly positioning itself. And if Nvidia breaks either side of their compression range, we'll be the first to map out what will be next. So if you have not, make sure you get subscribed. Share this with any other educators, traders who wants the clarity without the noise. Jose, anything before we close out on your end?
It's going to be a wild week, y'all. It's going to be a wild week.
Earnings. All right, y'all. That will do it for us. Class dismissed.